Hello. Good afternoon, everyone. Good afternoon, everyone. Thank you so much for coming into this room, and we're just about getting started. I want you all to just sit back, relax, and then help me welcome Mr. Yao Osei Tutu, who will be taking us through this presentation. Thank you so much.
Thank you very much, Emilia. So good afternoon again to everyone. So the presentation is a short one. Please, you may go ahead and present. I trust that we've all had a good lunch and we are good to go. Yes. So my name is Yao. I'm the Strategic Partnerships Manager at Impact Investing Ghana. For those of you who don't know, Impact Investing Ghana is all about building the ecosystem to advance. Please don't scroll forward yet. Building the ecosystem, impact investing ecosystem, to advance impact investing. So we work with all the actors in the ecosystem: fund managers, SMEs, transaction advisors, everyone. And the presentation assigned to me this afternoon is: who has dry powder to invest? Who has dry powder to invest? Quite interesting, because dry powder here is cash. We're talking about liquid assets, cash. So let me see how many of us here are SMEs. How many of us here are representing SMEs? So quite a number of SMEs in the house. Are there fund managers here? Investors? Others linked? Are there a few? Yes, there are some. I know some of you here are fund managers. Okay, a few. So, and it reminds me of some research I did while I was back in school, where I had the opportunity to speak to both fund managers and SMEs. And they had very interesting views on investment. When you talk to SMEs, they'll tell you, we can't find capital. We need money to invest in our business, and it's so difficult, finding capital. When you talk to fund managers, they'll tell you, we can't find businesses to invest in. You might not believe it, but when you speak to fund, they'll tell you, pipeline is so difficult to get quality businesses, to add to my portfolio. It's so difficult finding, quality businesses. So the question is, who has the dry powder? And one fund manager told me, yeah, do you know what the biggest problem with businesses is in Ghana? I said, what is it? Isn't it access to finance? He said, no. It's not access to finance. It's systems and structures. And finding good businesses. And you find a business, the man is the CEO, his wife is the chairman, and they have their board meeting in the bedroom. Who will take the minutes? That's just by the way. So we'll just screen forward. This is to give us just an overview of what the VC and PE scene looks like in Ghana, and then we'll have panel discussions which will go in depth and give us more details. So please, you may go to the next slide. We'll be covering what at all is venture capital, what is private equity, what are the different kinds of VC and PE investors, and what do they look out for. I think this will set a tone for the next round of discussions that we'll have. And how can you get ready for VC and then PE? Next slide. So just a snapshot. Private equity, as many of us will know, funds tend to invest in older, more mature entities that can increase profit with the help of investors. So they play a value creation, role as to how to create value. Venture capital is associated with the younger end of the spectrum. So these are young and growing startups which show a lot of promise, And one interesting thing is that it's not only equity that you can get from venture capital and private equity fund managers. They also do debt, either it's convertible debt, different structures and all of that. Private debt is also available. And these VCP fund managers are general partners. They are the ones who manage the funds, but they raise funds from limited partners, who give them the money to raise. So these may be pension funds, they may be development finance institutions, etc. Next slide. So we have some examples in Ghana. This is just a sample. We have Oasis. We are doing free adverts, for them. Oasis Capital. There's Wangara, Zibu, Impacts, etc. But we'll find out that they are very different in what they are looking for. So next slide. So there are different kinds of funds and different kinds of investment. You can think of it in terms of stage. At a very early stage, you have things like angel, investors or angel investing, which is venture capital, all the same, but these are typically high net worth, people who provide capital at a very early stage, of the business. And then you can talk about pre-seed investment. That's also a stage very early on in the life of the business. There are seed investors and early stage and then growth stage. Or you can also look at it in terms of focus, country focus. There are some funds which only invest in Ghana, and there are some funds which focus on West Africa. There are some funds which are continental in their outlook, and there are some funds which are even global. They just look everywhere. Some funds also specialize, by industry sector. So you have the talk about generalist funds and then specialist funds. Some will just say we look at all businesses. Some say no, we are focused on agric or just agribusinesses alone. Some will say we just do healthcare and pharma or tech or climate. And then we have funds that have a special interest, looking for certain themes. They have a gender lens, which means they're interested in women, promoting women, ownership, etc. Some are focused on impact, very hard on impact. So they are thinking about ESG, environment, social governance, or DI, diversity, equity, inclusion, etc. And more so with the execution of the sustainable development goals that we are all concerned about. Next slide. So angel investors or pre-seed or seed stage typically come in very early. And so the ticket sizes are small. These are not exhaustive. These are just indicative ticket sizes. They vary from market to market, So a seed investment in Ghana may be $100,000. You hear some fintechs reporting in Silicon Valley that they've done a seed investment and it's $5 million. So it varies from market to market, but seed investment is about a stage. It comes in very early in the life of the business. There's early stage when you have acquired some customers, you have some revenue, a little bit of traction, and you need to improve your commercials and operations. You can go for early stage investment. Ticket sizes may range from about $100,000 to up to $1 million. And then we have the growth stage where you are up further advanced in your journey and you are looking to consolidate your growth. And over the ticket sizes could, go all the way to $5 million. In fact, some funds even do a higher, ticket size than this. Next slide. What at all are venture capital and private equity investors looking out for? Because the SMEs say that it's so hard to get money from them. So we'll hear during the panel discussion what at all. So this is just to set a tone. There's going to be a whole session on that. They're interested in a good team. So the business is as good as the leadership or those who manage it. So they will look at the caliber. Does this team understand what it is doing? Does this team understand what it is doing? Do they have the requisite industry knowledge, the experience, the governance? So this is where the systems and structures come in. What does the model look like? Is there a business model at all? Is it a try or lack? Or there's actually a robust and rigorous, business model that has a competitive advantage? What is the potential for growth? Mind you, the venture capital fund managers and private equity fund managers are businesses themselves. So they are investing for a return. So they want to see how the investment is going to grow, is going to appreciate, and then eventually they realize it when they exit. So are you complying with the laws? Is what you are doing legal? Do you have your registration in place? We heard about audited accounts in the first session, etc. And then increasingly, we are seeing a mainstreaming of certain concerns like impacts. What is your environmental impact, social impact? If it's social impact on female ownership, impact on youth, employment, jobs, gender, diversity, inclusion, etc. So there are some funds which will hesitate to invest in you if your board is all made up of men. If at the board level, C-suite, everyone there is a man, they don't see a lady there. Some funds will have an issue with that because they want to see a balance. So these are things to think about as entrepreneurs and SMEs as well, if you want to access, VC and PE one day. And then exit potential. Funds invest in you so that they can exit, in 3 years, in 5 years, 6 years for a return. So they look at, they evaluate the opportunity and say that, can we exit? How easy will it be for us to exit? Typically in our market, the most common forms of exits are a trade sale. Trade sale here is simply where the investor sells their stake in the business. Okay, it could be to another business. In that case, it would be a strategic buyer, or it could be a financial buyer to another fund, and then they realize their cash. Next slide. So how do we get ready for that? Fortunately, at Impact Investing Ghana, we have a whole program which is dedicated to just helping SMEs access investment. Our program officer is here, Justina. It's called Deal Source Africa, and it's active not just in Ghana but also in Nigeria as well. And what is Deal Source Africa? Deal Source Africa is simply a program that connects businesses with investors. So what businesses are looking for? We've done the thinking, we've done the programming, we've done the connections. There's a digital platform, so you can visit there. Just Google dealsourceafrica.co. We established deal rooms. So it is Deal Source Africa that is running the deal rooms alongside. So as in the morning session, I believe, we had businesses who were introduced to investors. They send them pitch decks, and then they express interest in meeting them. So we call that our matchmaking session. So I'll find out from Justina how it went. So that is what Deal Source Africa does, and the benefits are evident. The businesses are not only just assigned to fund managers, but also benefit from the work of transaction advisors. You heard Andrew, the CEO of ZP, talking about how transaction advisors can add value, because a lot of the time you need certain things to be in place. You need a business plan, you need audited financials, you need policies, and these are things that are not in the domain of the entrepreneur. So there are specialists who come on board, who assist with all of these things. You benefit from investment readiness. You receive a customized end-to-end service from the team. There are also e-learning resources there that are even free, hosted on the platform. And then you are matched with transaction advisors to help you. Ultimately, you are matched with investors as well, so in deal rooms. So please do explore, do go check it out, especially even if you are not thinking about it now. In future, you may want to access equity funding. Check out Deal Source, and check out what is there, and then we wish you the very best in your search. So in a nutshell, this is what the VC and PE landscape looks like in Ghana. I hope it set the tone and made you hungry for more in the next session. Thank you very much. So it looks like I'll double as the MC for the next session, at least introduce. So our next session is a panel discussion. It's SME workshop on. So we are going to zero in on what are they looking for GPs. By GPs, we are talking about fund managers, okay, who make the investment decisions. The moderator is Isaac Newton Aqua. Are you here, please? Oh, our own Isaac. Oh, please welcome him with a round of applause. Welcome him. He's from the Netherlands Trust Fund /ITC. So, Isaac, we need you on the stage. ITC is the International Trade Center, and he tells me it's like WTO for SMEs. And then the other panelists, and we have Ashwin. Ashwin I know from MEST. Ashwin, please welcome him. There's SNM Agbenoto from Miripa. SNM, please join them on stage. Oh, let's give it up for them. I think there should be an entry point. Yes, there. And then there's Nana Yao and Sasapon from Injaro.
Thank you. So please, my dear panelists, have a seat. So good afternoon, ladies and gentlemen. Just get a feel of the room. Who here is looking for funding? Can we see the hands up really high? Who is actually looking for funding? Who came here hoping to really understand? I see some shy hands. So you guys are not really, but the ones who really want, because the GPs are looking to spend money. So I'm trying to help, I'm doing the work for them. So there are only 5 people? That's all? Aha, more hands are coming up. Excellent, excellent. Okay, so we're just going to dive into look at what GPs are looking for, right? There's always this mismatch of SMEs. So I work for the International Trade Center, and I'm going to get the GPs to introduce themselves, companies, but we have a lot of startups we work with. And before that, I was working with different hubs, and I always get complaints, Isaac, I have a great business idea, but these GPs aren't listening to me. They don't mind me. They're not picking my calls. I met them yesterday. They haven't transferred the money. What's going on? So now that we have serious investors who have dry powder and are looking to sprinkle it across, what is it that they're looking for? So please, we'll start with ladies first. I am a gentleman. So please introduce yourself, your firm, and maybe some of the, if there are any kind of sectors focus areas that you look at.
Good afternoon, everyone. My name is Essie Nam. I work with Mirpa Investment Advisors as a senior analyst. Mirpa Investment Advisors is the fund manager for Mirpa Capital SME Fund 1. And we invest in a couple of sectors. So we do agribusiness, primarily agro-processing, healthcare, education, financial services. And then we also invest in business services that focus on the mining and the industrial sectors. Yeah, so those are the sectors that we invest in. Now we have an allocation for opportunistic investment. So if you're not in any of these sectors that we mentioned, but you have a really strong business and we can make a really good case, then we can use that allocation for such an investment. Thank you.
Thank you.
Hi, Nanayao Ansa Sampong. I'm an executive director at Injaro and the lead on the Injaro Ghana Venture Capital Fund. So IGVCF invests in two broad sectors. So we call one the basic needs bucket and then the industrials bucket, a bit similar to what Mirpa does. So basic needs would cover education, inclusive financial services, healthcare, food and agribusiness. Then the industrials bucket would be light manufacturing and then services to the extractive sector, mining, oil and gas. We're doing around $2 million per transaction, and we are still deploying. So we still have some dry powder available for companies that are looking for funding.
Ginger, my guest small. Let me feel welcome. Thank you. Please, Ashwin.
Good afternoon, everyone. I know it's been a long lunch. My name is Ashwin. I've been in Ghana for about 10 years. I'm representing today MEST. So MEST is Meltwater Entrepreneurial School of Technology. We are typically a fund which writes the first check for every entrepreneur. So we typically invest anywhere between $50,000 to $250,000. We like to be post-product, sometimes pre-revenue, depends on really the product, but essentially also looking really much at the post-revenue lens as well. Typically we invest in anything technology, and we've invested in Uber for tractors, we've invested in production agencies, we've invested in e-commerce companies. We typically invest in anything where we think the founder is motivated by running the business. And we've been in Ghana for almost 16 plus years, and we've been investing pretty much quietly over here. Thank you very much.
Thank you. So see, we have a range of investors from actual foodstuffs and actual products to processing, to extractives, and also tech. So I'm sure there's something for everybody here. Now the question is, how do you get that money? So, starting, what is it you're looking for? When you're looking at a business, whether it's a $50,000 check or $2 million check, what is it that you're looking for the business or the business team to have for you to be convinced to depart with your money? Should we do the round ladies first again? I like that.
Okay, so for us, a couple of things are important. I think first would be track record of execution. If you're backing a great company, essentially you are backing a great team that hopefully knows how to implement the strategy. So we'll be assessing the team's track record of execution. Then we're looking at, leadership management style and practice. You want to see how decisions are being made, how quickly decisions are being made, so efficiencies there. You're looking at risk management, how the team identifies, evaluates and manages risk, because you're looking at how they are protecting the assets of the business. You're also thinking about clarity in terms of articulating the vision of the business. Is the team rowing in the same direction? Do they understand the overarching objectives of the business? Lastly, I also think team dynamics is important. Do you have a collaborative work environment? Do you have an environment where decisions or ideas can, go bottom up, or is it a top-down structure? These things are important because you are backing people to implement the strategy. So you need to be able to understand what makes them tick. I would say these are some of the broad areas we look at.
So I want to maybe just ask some questions I'm sure the audience is asking. You mentioned traction. What does traction mean in your eyes? I'm sure people here, okay, I've heard it, look at all these forms online or even ChatGPT, you must have good traction. But what does it mean practically?
So you have a business model that you are following, that you're executing. So what have you achieved? Have you gone through a whole business cycle, the ups and downs? Because very often somebody starts a business and does not understand or has not overcome any hurdles. But if you've gone through an entire business cycle to understand the elements of the business that might be seasonal, that could be subject to impact from externalities that are beyond your control, and you've survived that, then you are ready to sort of have an external partner be at the table, because you understand your business. If you do not understand your business, how can someone else understand it even more than you, right, and help you? So it's very important that traction, we can see it, we can validate it, and that speaks again to the performance. So we're not saying that you should necessarily have been profitable for the last 10 years or 5 years, but you've learned from any missteps, and there are systems and processes there to mitigate, the risks.
And then one last question for you before we move on. Systems, processes, decision-making. A lot of startups, I think, would admit that they're a bit chaotic, that they are Wild West style, just anything goes. But here we are talking to the people who are looking for money, and they're saying, no, you need to have a structure in place. You need to have ways that things are done. How do you assess that a company has those structures? Because imagine they come to you with their ones and zeros, or we sold 10,000 bags of rice, we on 6 different markets, but now you're diving deeper beyond the numbers, and how do you decide to go through those markets and things like that?
Something that is very easy to determine is, so if a company tells me something, while I value the input, I would like to also, for these companies to show me what they are purporting to be doing, right? So you can tell me, well, this is how procurement is done. But the evidence of that is I can go to everybody in that procurement department and they should be telling me the same thing, right? Hopefully there are documented processes that speak.
Documented processes.
To the, how you do procurement. And again, I think it's also very, very important to understand that while a startup company can be chaotic, we understand that, but it's a process. If you are committed to a journey of, getting a bit more structure in the business, that in itself is a good sign. But there are some companies that are perpetually stuck in that startup phase, and they use that as an excuse not to develop processes and systems. And that's always a negative outlook for an investor.
Thank you. Please, I hope you're taking notes. We're not judging you, but maybe just making it very interactive. Who here has standard operating procedures in their business? Can we see by... Okay, so it's a bit less. So they are coming for $2 million checks yet, but we're getting there. They now know what they need to do. Okay. Next biggest size, I believe, is Madame.
Okay. So we are talking about what we are looking
what are you looking for
in the business. So I think that Yao has talked a lot about the team and about the traction. But we are also looking at the business model itself. We are looking at the market and the demand. So the markets in which you are should be growing, and the business should have an addressable market. We need to validate that market. We need to look at your financials and see how you've grown, which comes back to traction. How you've grown over the years. And when Yao talked about traction, he talked about the full business cycle. But for instance, we are talking about targets. What did you expect to do? What did you actually do? That also gives us an idea. Okay, you are this number of years in the market. Where are you now in terms of your financials, in terms of your market size? We are looking at the competition and we are trying to assess, for instance, what have your competitors done? People around your age, people in the same market, how are they doing? So all of that goes back to validating the demand and the scalability of the business model.
Can you just touch on growing market? I know it might sound very obvious, but how do you actually determine that a market is growing? Because I'm sure the companies, they have great products and they're pushing out great products. But how do you differentiate between pushing out great products and pushing out great products into a growing market?
Okay, so for instance, there are things that you can do really, and it depends on the industry in which you are and the business model of the business.
You're in agribusiness, you invest in agribusiness?
Yes, we do.
I'm sure that, can you see some agribusiness hands in the, are they anybody in agribusiness? We have 1, 2, okay, so you're potential people here, please be paying attention. So maybe use as an example, how would you determine?
Yes, I was going to use an example. Excellent. So the example I was actually looking at was, for instance, within printing. So you want to go into the printing industry when you see that everything is tending more towards digitization. So then you need to convince us how that market is growing and how exactly you expect, if it's a declining market, we are going to be investing in you in 3 to 4, 5 years. I mean, we'll do the market research and everything. We are going to have experts, so we don't believe that we know everything about the markets and the sectors in which we invest. We are going to be relying on third-party experts who will do commercial due diligence, who will do technical due diligence. We are going to be looking at your competition and how generally the trends in the market have been going. So all of these things are going to help us to ascertain whether indeed there's a growing market for that product. Again, remember, we are in the information era. And so there's a lot of information out there. If not for anything, we can start with the desk research. But if, for instance, you are looking at the superfood industry, where people are beginning to be more health conscious, environmental conscious, and then you have businesses that are looking to invest in health products, basically. Maybe it's agriculture, they are doing primary agriculture to maybe process those things that the pharma companies use. Then you know that, okay, the superfood and the wellness and beauty industry is growing. This is how much they are growing globally in Africa, in Ghana. This is how much they are going to be growing at. And not just that, you're also looking at the specific company, right? So you're looking at who are the off-takers. It's not just about producing for producing's sake. So do they actually have a market already, or are they now going to be looking for people to take their goods after they've produced. So those are all the things we look at.
Okay, thank you very much. I'm hoping by the end of this, please give him some funds, I'm hoping by the end of this, you all know how best to present yourselves. Because I'm quite sure you might have the traction, you know your market, but you're not articulating it to the investors, and then therefore they're not having that confidence in you. So we're going from a large ticket size of 2 million. So what ticket size do you do then?
So our ticket sizes, we have a suite, so it's a Ghanaian fund, a Ghana CD denominated fund right now.
Local currency,
Yes,
excellent.
local currency. But we prioritize export businesses and then businesses that have very low dependence on foreign or imported goods.
Okay.
So our ticket sizes are Hello? Okay, good. Our sweet spot right now is around 7.5 million. So that's anywhere from the CD equivalent of 500,000 up to 2 million.
Okay,
$2 million.
so thank you. And now to the other side of the spectrum.
Yeah. So again, I think the other two investors are typically on the far end of the spectrum. MES typically likes to follow on this end of the spectrum. So we're typically early stage. To be honest, to expect you guys to have processes and standard operating procedures, I think is completely unexpected. I think it is from our end. I think if you are a startup which has that, kudos to you. But for us, I think we look at, like primarily like 4 or 5 different variables before we actually choose to invest in a company. The first variable for us, which is very critical, is how strong is actually the team. Right? Like we really look at how complementary the skill sets are. We often even look at doing individual interviews of the teams to actually see how much they're actually part of the overall perspective. Because often or not, like you have one CEO, you have one CTO, one COO, you have all these chief officers, being allocated in a company, but none of these people actually behave like chiefs. They actually behave more like employees, right? So at that time, you often tend to ask CEO, hey, listen, is this your team or is this actually the company itself? And I think by the time you reach that stage, you'll see that there's only one leader, usually followed by a bunch of people supporting him, right? So for us, the team is actually extremely critical. I think that's the most important variable for us. The second variable, obviously, this is more in the recent past, and I would definitely agree with, I think, Esanam there, and I was just having a conversation with Richard, is how much of it is actually local currency dependent versus how much of it is actually, how much of your, let's say, your revenue is actually dependent on the local currency, right? So a lot of the businesses which are earning money in cities often find it very hard to raise money in dollars because when you compare it to FX, you often tend to lose. So what we try to see from the get-go is that, is there a potential spending pattern there where the user will pay dollars from the first upfront? Right? And it doesn't need to be necessarily in Ghana, it can be abroad, you can be a London-based or an American-based startup run by a bunch of Ghanaians and actually trying to make money more in the foreign currencies. So we try to see how much of that business it can be. Again, in a few sectors such as agriculture, education, you want to keep it local, but I think when it comes to commerce and when it comes to, I think, different sorts of entities, you can definitely look at a global currency. Right? That's the second thing which you look at. The third thing which we really look at is, I think, the scale of evolution of the business. This is something which, I don't know, Paul Graham of YC talks about, a bunch of different people talk about, is in case you can't go ahead with this business, how fast can you pivot and what can you pivot to? So what we call that is, we call that the scale of evolution. Ideally, because as we all know, like I think many of the successful businesses which started off today, and I think we even heard Andrew today in the morning, when Andrew started off the business, it was supposed to be a pure remittance play, but today he's holding wallets and actually doing a bunch more different things, right? So for us, it's about also trying to evolve as quickly as you can, because the market is a blocker today, right? I think most African markets today, the markets are the blockers. It's not the people within the markets, but actually the markets itself. So that's the third thing which we look at. And the final thing which we really very simply look at is, if you have built a product, do you have any usage? Right? It's very simple. You come to me and tell me, oh, I've built an incredible product and you have 2 users. No, you've not built an incredible product. Right? You've built an incredible product, you have 1,000 users and you don't know how to monetize. That's a very good problem to have. We will help you figure out how to do that. But if you are revenue generating, then obviously we look at the recent traction. We try to understand what the cost of acquisition of users should be. But overall, we're pretty, I think, like more fluid, and I would say more qualitative. I think as you get more and more deeper into the venture-backed game, you'll become more and more quantitative. So with us, we always believe the founders. Like, we're strong supporters of the founders, we're best friends with the founders, and typically then when we go into rooms with people like this, we're best friends with them too, so then easier to make everyone best friends as well. And that's how we typically operate today.
So, in case you don't know, MEST also has an incubator arm. So a lot of times the founders are with MEST for several months. And so maybe I want to touch on that a little bit, because unlike most other investors, you get to spend time with the founders. You're there educating them, eating with them, spending time, so you get to know them. But still, you mentioned that knowing the team and how the team set up, which is down from your 50K to your 2 million, is very important. Given that at that stage in MEST, these are brand new companies that are being founded, how do you assess that the team is the right team for the vision they have to go forward with?
Yeah, I think that's a very good question, and also just answering this on. So we also have other mechanisms of getting to know teams, and we have also the products, because we run other programs as well. So I don't know if you guys have seen the UNICEF Startup Lab or the MEST Express or the MEST Scale. Those are all ways for us to get to know you. That's how I often tell most of the entrepreneurs. I'm like, don't think of it as an accelerator program, don't think of it as an incubator program. Come into it thinking you will get to know an investor really well, and we will get to know really well, and then we can help you grow it as well. But just getting back to, I think, Isaac's question, I think it's really about, at the end of the day, understanding complementary skill sets. So for example is, if the four of us were to form a team today, I would see what S&M skill sets are, how our colleagues' skill sets change, my skill sets change, and your skill sets change, and how they actually come together to make the business successful. Often or not, I think businesses require 4 or 5 different, I think, like verticals to be successful. Obviously, you need one person who's strong in tech, you need one person who's really strong at the numbers, one person who's really strong with interpersonal dynamics, one person who really understands metrics, and the final person who really understands, I think, building businesses and execution. So as long as we have any of these, I think, verticals mixed about, I think we're more than happy to trust a team and actually see forward. Plus also, we don't think teams are constant. I think people often leave and people often join, and we're also open to figuring those things out as well.
Okay. And then maybe a very interesting question I think a lot of people have is the question of valuation. So we want money, we understand that it's going to come as a price, but how do we understand the valuation or the cost of the price that we're giving up? So I want maybe just combine 2 questions, valuation, and then also how should companies approach you? So is it through cold calling? Do you have open door policies? Do you have programs that you get involved in? So one, how do they get into the door to meet you? And then how do you determine how much you're taking from them?
Sure. Valuation is always a conversation. I think someone said the value of something is how much someone is prepared to pay for it. So, I mean, there are technical ways of getting to that number, but it's always a conversation. I think for us, the approach is to be open-minded and to be fair. I think there have been instances where we've actually even gotten a third party to also work on an evaluation for us to even have a conversation about the numbers. How do people reach us? Open door policy. You can actually literally walk into our office anytime. I believe our website is also has contacts. So for the fund that I run, it would be igvcf@injaroinvestments.com. Or you can go to the injaroinvestments.com website and ways of reaching us.
Thank you.
Okay, so I'll start with the valuation question as well. Valuation is always a touchy subject, and typically, whenever we speak with any entrepreneur, any business, we would ask you what your valuation is, what your cap table looks like, who has already invested in, how much you, the entrepreneur, has put in yourself. Then we assess that valuation. Again, valuation. Hello? Good. So valuation again is about how much someone is willing to pay for something, right? So the business has its number, and then we also look at it and assess if it's a fair number. If we don't agree, then we are going to be coming up with reasons. So we are going to have our own number. Typically, we've had an instance where we had to look at the number, we didn't agree, we talked it over. In fact, we've had a couple of them. We talked it over with the promoters, and there was one instance where we actually went back. We did 3 different valuation methods, and then we came back to them, explained the basis of our valuation, explained why their valuation was too rich. They ended up agreeing with our valuation. If there are flaws in there, you can just question. You can question how they came to their number and why they thought the assumptions they used were right. And then it's in that conversation that some compromises can be made. So that's the first thing with valuation. In terms of how the businesses can reach us, I would say that every fund is looking for something different. For instance, there's the very early seed and pre-seed investor here. Then there are those of us who do seed and then early stage growth investments. So there are different kinds of investors, and you need to know which stage your business is at and what kind of capital you need. And these investors, including MERPA, will have their information on their website. Again, we are in the digital age. So investors have their information, they have their criteria, they have what exactly they are looking for. So if you need to reach MERPA Investment Advisors, you just need to use the website, MERPA Investment Advisors, it will come up. Please make sure to use Investment Advisors or MERPA Advisors. Our criteria is all on the website, the things that we look out for, including the revenue metrics, the kinds of teams we are, or businesses that we invest in, the sectors that we invest in, everything is all there. And then the contact numbers are also there. You can drop an email to info@merpaadvisors.com. Everything is literally on the website.
Thank you.
Yeah, I actually had a very smart answer. I was like, we wait for valuations till these two come into the game, but in our space, it's pretty much a range. So if it's early stage pre-product, we say, okay, between $500,000 to $1 million. If you have product and maybe some amount of revenue, between 1 to maybe 2. If you have a product and you're starting to see some amount of growth, anywhere between I think 2 to 4, and then anything going after that. But typically, what we have seen, at least in the early stage game, is, or whenever a priced round happens, and I think that is the crucial junction for us when it comes to valuation, we expect the priced round valuation to be anywhere between 8 to 10 million. So we as early stage VCs try to make sure that when the pricing of the round happens, it's between 8 to 10 million. Because then we don't get screwed, and I think following on investors also don't get screwed, because they typically come in when there is actually a price on the shareholding, or they force the company to get into the price of the shareholding.
Okay, so we have it here. They are looking for you. So it's not that they are not trying to deploy capital. They've given you where you can meet them, get in touch with them. They're hoping to find credible businesses that fit within their criteria. So I'll just say any of the closing statements. MEST, one of the most active VCs, also maybe in Africa, not just Ghana. MERPA, in Jaro, you've been doing lots of great deals, also with Gpay and other places as well. So, any closing statements, any words of encouragement to the startups looking for funding? What did you keep doing?
I think we recognize that building a business, first of all, is not easy. Building and sustaining a business in Ghana is definitely not easy. But then there are partners out there willing to support you during your journey. So don't lose hope. Just research and find the right kind of partner that makes sense for your business.
Okay, so I think that Yao has already said the first part of mine, research. Know the investor that you're going to be reaching out to. I think Jerry also mentioned it in the main session. Know the partners that you are reaching out to. What are they looking for? And this is going to be a partnership. So what's in it for them as well? It's not just that they are giving you the money and then they go to sleep. They are looking to invest in you to make a return. So you need to know exactly what they are looking for. You need to know the criteria that of the businesses that they would invest in. You need to know what sectors they will invest in. So if I say I'm an education-only fund and then you come to me with a fintech, obviously I can't invest in you. My mandate does not allow me to do that. So you need to know exactly what the partner you are engaging is looking out for and whether you even fit the criteria in the first place. And then Yao has mentioned about the difficult journey that entrepreneurship is. And there are certain things that are difficult, like the business plan. Having a business plan is difficult, making a comprehensive business plan. And some of these things, we get the investment advisors to help us with them, and that's great. But you as the entrepreneur, the one that is running the business, it is your business we are investing in. It's your team that we are betting on. And so you need to know the business plan. You need to know your model. You need to know the strategy and to be able to speak to it. Because eventually when we give you the money, it's still your business. You are going to run it. We are going to help you to run it and to take it to the next level that you are looking to take it to. So the investor, the entrepreneur needs to know and speak to their business. It cannot be underemphasized.
Thank you.
Yeah, I'm going to keep it short. In the last, I think, like 3-4 years, and I think this is post-COVID, I think Ghana has been pretty humbled, I think, when it comes to the investment landscape. I would say that before that, Ghana was considered to be one of the big 5 in Africa, but now we're not anymore. So I think investment's slowing down. But what we've seen generally about the landscape is businesses which sound not sexy are actually very sexy.
Please say it one more time. I don't think they heard you.
Businesses which don't sound sexy are actually very sexy, I think. I'll be open and honest. I think in Ghana we've been humbled. Like I consider myself a Ghanaian now. Like back in the day, I would think about a person doing a waste collection business. I'd be like, why is he doing that? Why is he not building an incredible app where he can get the youth on it? Versus now I'm just like, just build a waste collection business. Makes sense. You'll make money, you will be actually able to provide jobs, you'll be able to do something really, really valuable, and you'll actually be saving the world, which is what essentially we want entrepreneurs to do. So essentially, like, that's my first piece of advice. Like, look for the unsexy businesses. There is something sexy about it. And I can tell you, all of us over here, sitting here, I think 6 years ago, 7 years ago, I think even Jaro and Jerry was initially starting, we never knew ag was going to kick off so much amongst young entrepreneurs. Like, we never thought about it. We were always the people thinking, oh my God, the young entrepreneurs are going to go do something really cool. Now you look at a youngster, he says, I want to be a farmer. We're like, okay, here's take our money. You know, so that's where the unsexiness comes from. The second thing, which I'll be open and honest, which is that don't screw anyone over. Okay? This is a very small ecosystem. You'll be surprised. The person you have decided to screw over at the start of your journey is that person who's going to decide if you're going to get on to the next part of your journey. And I'm going to tell this to all the young entrepreneurs here. Just look over your backs, because the person you're screwing over is watching you and is also looking at that time when he or she is going to humble you. So those are 2 just wise words of wisdom I would probably give you at this point.
Thank you very much. Speaking of AgTech, we did some research last year, 2023, and AgTech was the most funded sector in Ghana, by far. And you think it's fintech, the ZPays and Blue Penguins and so on, but it was actually AgTech, followed by actually logistics, and then fintech was 3rd or 4th, right? So Okay, solar energy, right? So, I mean, so agtech, agribusiness, you guys, there's money for you sitting in the pockets of these investors. If you digitalize your business, then you can come here as well, but otherwise, you have your classic investors there. Thank you very much. Thank you for sharing the information. Thank you for supporting startups, giving them advice. Sometimes hard to dish the money out, but thank you for giving them money as well. Okay. Is there a picture?
Okay, so our moderator is the next in the lineup. So Isaac will be taking us through a short training and presentation, understanding the VC game. Understanding the VC game. So we are going to find out whether the VC game is basketball or football or soccer or baseball. So Isaac, welcome again, and we are all ears. Okay, let's welcome him again.
Thank you. Who's handling my slides? Can I see? Okay, we good? Okay, so just a little bit about me. I work for the International Trade Center. I'm the National Project Coordinator, supporting tech startups and IT BPO companies in Ghana. Been doing this now for the last 2.5 years. Beforehand, I was working with different entities from accelerator programs, supporting tech startups, and so on. I have a foreign accent. I lived in Austria before coming down to Ghana, or Austria, Germany, UK. Worked for a tech startup. I was the 7th person in. Unfortunately, the 6th person was the last one they're giving shares to, which is a shame, because otherwise I'd be an investor. Watched the company, or helped grow the company to 55 people. And then within 2.5 years, they had an exit of $17 million. At 22 years old, I was the old person in the company. So the guys are now investors and doing sailing, traveling the world, and so on and so forth. So I've seen the life cycle of a startup. I've also helped various companies. I'm proud to say one company went through the accelerator program at the Ghana Innovation Hub from Blue Space. They had an exit, so they are now investors investing into things. So seeing the potential and the reality also happening here. You know, we also like, oh, it's hard to be imagined, but it's actually possible. It's actually happening. We have case studies here in Ghana. So please, the International Trade Center, it's a partnership between the Dutch government and the World Trade Organization of the UN. It was kicked off in cooperation with Gvca. So this is Dr. Efwa from Gvca and our Chief Executive, Pamela Cook-Hamilton. So they all send their regards. Next slide. And basically what we try to do, we work across different countries in Africa. So I'm the national coordinator for Ghana. We're in Senegal, Mali, Benin, Ivory Coast, Ethiopia, Uganda, doing some projects in Rwanda, Sierra Leone, and Zambia as well. In Africa, we have some touch outside as well. But basically we're here to, slow down. We're here to help support companies grow. Okay, so the title of the conference is Bridging Traditional and New Financing Landscapes. You have the traditional and also new financing landscape coming. Please. So if you have a smartphone, and trust they're all in the digital age, I would love for you to scan this. And I have 3 quick questions I want to ask everybody here at this conference. So we stay here for a little bit. So when you get there, you should see a question about